I'll be going through with you US Bancorp. Just type in Google and click enter. That's the name of the stock, full name from Google, and it's USB's symbol is 52.79 US dollar for one stock. It's a billion size firm because it's a big size firm. It is paying dividend yield. I just want to point out that any firm that is paying dividend, that means that they are financially very, very strong, because that means that they have extra money after paying their costs, loans, liabilities. They still have extra money, and that it pays to shareholders as dividend. So that's a positive news. So um, that's very nice. So don't worry about the amount of dividend, because it could be, even if it's less than 0.5%, that's a positive news, because that percentage is the extra money of the firm. So that's brilliant. And let's go and look that in Wikipedia, when was this founded. So I can see that it was founded in 1968, 50 years ago. So let's see what the employees have to say about this. What I'll do is I'll copy this exactly from Google, paste it here, type Indeed reviews, enter, and just go here, and you can see 7,300 reviews, 3.6 star. Read through the reviews yourself, check out the salaries they're paying, the jobs listed, the question answers, the photos, and everything. And I want you to check the reviews in Glassdoor as well. That's a brilliant website. And I can see we have 5,200 reviews, and it's 3.4 star. It's, you can check out the jobs, the salaries they're paying, the interview questions, the benefits giving, and the photos. Now let's go to Justia Patents, and I want to see the patents that this firm has. So I can see that it has patented in 2016. Please look at assign your applicant, because these are people who have rights of the patents. And you can check out the patents and stuff. And the more patents the firm has, the more stronger it is in the market, and that's brilliant. And please look for recent patents as well. That means they're still innovating. And so they do have patents, and I want to see them in Yahoo Finance, and I want to check out the key executives and salaries that they are getting. So please type here, paste here, and I can see USB is the symbol. That's the one I need to click from NASDAQ. And then I want to go to profile, and please check out the sector, industry, and the employees. And I can see 5 salaries. I can see 5 key executives, and all of their salaries have been shown. That's brilliant, because the more transparency in terms of salaries there are, the more information we have regarding the salaries of key executives, the more transparency there is, the more trust we're able to build that with that firm. So it's good that they have shown us all the salaries. Now I just want to go to macro trend, and I want to compare the ratios. Go to price ratio, price book ratio, and paste in the thing, or you can simply not simply, but actually you need to know the USB is the symbol. So I'll just type in USB, click this one. If price book ratio is less than 1, that means stock is cheap, it's discounted sale, it's a sale. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. And so let's have a look. Okay, so it has loaded up. So I can see that the price book ratio right now is 1.56. So somebody who buys the stock right now in August 2019, they will be paying 1.5 times more money. So it's 1.5 times more expensive. Somebody who bought in 2009 March, they got it a discount of nearly 35%. So they paid $11 to buy something that was $15 worth. They got a discount of 35% in 2009 March. Right now it's 1.5 times more expensive. Let's see other ratios. I want to see the current ratio. If it's less than 1, that means stock is risky, because liabilities are more than assets. If it's 1.5 or more than that, that means stock is safe. It has a good margin of safety. Please look for 1.5 or more than that. Let's have a look. Okay, so I'm looking for 1.5 or more than that. It is less than 1. It means that if you see vertically up liabilities are more than asset, it's a risky stock. Let's look at the previous trend. So it has been consistently less than 1. That's a risky stock, I would say. And I can see that, for once or twice it is 1 or 1.05, a little bit. But since consistently 2005 until recently, it's a very risky stock because consistently liabilities are more than assets and it's a risky stock. Let's go to debt equity ratio. I'm looking for 0.5 or less than that for it to be safe. This ratio will tell me if the company is mainly operating on debt or equity. Let's have a look. Right now, I can see it's more than zero point 0.5, so it's a risky stock in terms of debt. Let's look at the previous trend. Has it ever been zero point 0.5 or less than that? No. So I can see that since 2005 up till now, recently, consistently, it has been more than zero point 0.5. It's a risky stock, and in terms of debt, let's look at return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Okay, so I'm looking for 8% more than that. It is more than 8%. That's brilliant. Let's look at the previous trend consistently. Let's have a look. So I can see that since consistently 2010 June up till now, consistently it's more than 8%. So that's a brilliant return.